Guys, this is Ty Zen again. We're broadcasting from the biggest Starbucks in Dallas here. This place is massive. There's like 100 people in here doing their homework in here. The most important homework that they're not doing is doing research on cryptocurrencies and Bitcoin. Now you guys saw in the previous video here where LeonFood.com and I got kicked off of the Dallas Federal Reserve property. Yeah. We're starting to build a track record of getting kicking off by security guards, guys, you know. But hey, in this video, LeonFood.com is going to share with you guys how the big boys in Silicon Valley, in Northern California, around the San Francisco area, how they invest. And after that, I'm going to share with you guys how to take that same approach and how this is the best time in human history for the little guys like us on Main Street to do the same thing. So how do they invest on Wall Street, the venture capitalists?
Okay, so all around Silicon Valley on Sand Hill Road,
Yeah.
there are approximately 300 and change VCs
Yeah.
all around the Bay Area.
Yeah.
I think most of them are, the famous ones are on a road called Sand Hill Road or something like that, right? That's where like Anderson Horowitz and a lot of these big names, Kleiner Perkins, you know, these VC firms, they control, I would say, if not hundreds of billions, trillions, you know, of risky, high-risk capital.
Yeah. Hey, and just to give you guys an idea of how much a billion is, guys, if you try to spend as much money as you could every day of your life, if somebody gave you $1 billion and you try to spend millions of dollars every day, you could not spend it all in your lifetime, no matter what you tried to do. That's how much $1 billion is.
It's 1,000 million.
Yeah.
It's 1,000 million. All right. So yeah. So it's really impossible for anybody to consume that much money.
Yeah.
Now it's possible for you to waste that much money. It's possible for you to give away that money.
Yeah.
But there's no way for you to actually consume that.
Yeah, go up there and buy $1 billion worth of stuff.
Yeah. I don't care if you're doing drugs, hookers. You know, there's no way you'd be dead.
Yeah.
You know, if you did try to do that. So, but the idea is that if you are a tech entrepreneur,
Yeah.
you could go to Silicon Valley and pitch your idea. You could talk to one VC fund every single day.
Yeah.
You know, 5 days a week, and over an entire year, you still would not have spoken to everybody.
Okay.
That could potentially fund your idea.
Yeah, and if they agree to fund your idea, they'll drop a few $1 million on it immediately.
Oh yeah, like $1 million to then like whoever, like let's say you were one of them,
Yeah.
and I could come pitch you, and you worked for one of these VC firms. You could write a check out for $1 million.
Yeah.
Right on the spot, right?
Without any approval.
Without any approval, because $1 million is a rounding error.
Yeah.
Right. I mean, $1 million, and typically it doesn't work that way. It typically would be you would get, say, 3 of these VC firms, and they would be like a lead investor.
Yeah.
And if you could convince one of them to invest,
Yeah.
then 2 or 3 would follow. They follow the crowd too. They're
Yeah.
like they're not any different than Main Street, you know.
Yeah, they just have more money.
They just have more money, but having more money doesn't make you smarter.
Yeah. So now they are willing. You were saying that they were willing to risk in different ventures, different businesses.
All right, so
ideas.
I work for a startup, so that's how I get paid, right? That's how I typically, I'm an iOS developer, and people, these entrepreneurs, they would go and pitch in investment firms, and they would raise money, and then that's how I got hired. That's how I got paid. I got paid to actually try to build the idea that they pitched to their investors.
But you were talking about how they have an appetite for risk, how they're willing to spend money on all kinds of different projects.
Oh yeah. And you have to understand that if you get a Facebook, a Google, an Airbnb, an Uber, right? The return on that investment is 10x, 100x, even 1,000 times your money, even 2,000 times your money.
Yeah.
Okay. And so the reason
you talk about Peter Thiel and he invested.
Okay, yeah, that's a classic example, right? So Peter Thiel was part of the PayPal Mafia, right? People don't realize that he's a billionaire, but he's not a billionaire for the hard work he did at PayPal.
Yeah.
All right. So he along with Elon Musk and a bunch of other guys.
The founder of Tesla.
The founder of Tesla and SpaceX right now. So in the 90s, this is pre-Bitcoin. Where the idea of internet money, where the idea of you could send money electronically the way you send email electronically. There were about half a dozen of these startups, including Elon Musk, including Peter Thiel, but about 5 or 6 guys. They realized that they're all doing the same thing. and what it would be better if they pooled their resources together
Yeah.
and formed the company that we now know today as PayPal.
Yeah.
Okay, PayPal then was bought out by eBay after a few years. I don't recall exactly the year. You can Wikipedia the history, and it was $1 billion and change, 1.2, 1.5 billion. So the 5 or 6 co-founders walked away with between 100 to 200 million dollars.
Yeah.
On that, right? So they literally made, just on that deal alone, hundreds of times their money.
Yeah.
The founders who actually did the work,
Yeah.
and the investors who backed them,
Yeah.
right? When eBay
Yeah.
was bought out, right? So then, this is then known as the PayPal Mafia, because you had 5 or 6 of these brilliant guys, among them Elon Musk and Peter Thiel, who are probably the most well-known, then walked away with 100 to 200 million.
Yeah.
And of course, the most famous one of those guys is Elon Musk, who then, that was where the capital for Tesla, Solar City, and SpaceX came from, right?
Yeah.
So, that's typically how, when the Silicon Valley investors invest. So Peter Thiel, let's go back to Peter Thiel, right?
But then he took some of the profits that he made from PayPal.
He had 100 million, 100 to 150 million, right?
Which is a big number.
It's a big number, but it's not a billion.
Yeah.
It's still 10 times less than a billion,
Yeah.
right? I mean, a billion is 1,000 million. He only had 100 million, right? So he then meets a kid named Mark Zuckerberg.
Yeah.
Okay, and he gives him. I think he was one, if not the first outside investor, or one of the first outside investors. He writes a check to Zuckerberg for $500,000.
Yeah.
Which, if you have 100 million, it's
That's
like
nothing.
us. It's like us putting $5,000 in Ethereum.
Yeah.
Something like that, right?
Yeah.
I mean, that's the equivalent.
Yeah. It's not a big deal.
It's not a big deal, right? 8 years later, Facebook goes public. An IPO went out in 2012.
Yeah.
And I think he cashed out roughly about $1 billion.
Okay.
Okay, so a $500,000 investment goes to I think 1 or 2 billion.
Yeah.
And I think he cashed out about $1 billion.
Yeah.
Okay, and then he's investing in other stuff.
And that's like,
But that's how he became a billionaire. The point of the moral of the story is that
take small risk
he did not become a billionaire
because he was
because
smart.
he was smart, or because he.
No.
And he's a smart guy. I'm not saying
Yeah.
he's not. What I'm trying to say is he is a smart guy. He's a brilliant guy, along with Elon Musk, along with Zuckerberg.
But the thing that he did that a lot of people would not willing to do is he was willing to take small risk, use a small portion of his capital and the resources that he has, and invest into something that he saw that had a potential for lots of growth. And when we talk about lots of growth, we're talking about like a 10x, 100x, 1000x.
So he made
return.
2,000 times his money.
Yeah.
Okay, so that $500,000 investment turned into billions. It was roughly 2,000 times return in 8 years.
Okay, so this is what I wanted to talk about, was that in order for someone to make that kind of investment into Facebook or Yahoo or Google, they have to be what's called an accredited investor in America. That means that you have to have like $250,000 in cash, right? There's a bunch of other stupid laws that they put in place to prevent the little guys like us on Main Street.
But they say to protect us.
It's to protect us.
Yeah.
However, imagine if you were able to put $1,000 into Facebook when it first came, when Mark
Zuckerberg was trying to raise money.
Yeah. Then that $1,000 could have been 2,000 times worth 2,000 times
2
more.
million.
Yeah, worth 2 million. But because the guys on Wall Street, what they did was they put this stupid law called accredited investor in place. So now you have to have $250,000 in cash and a bunch of other stupid restrictions before you are allowed to invest in these startup companies like Facebook or Google or Yahoo or anything like that. And this is the reason why we take the same approach as a little guy on Main Street. We take the same approach with Bitcoin and cryptocurrencies because it's the first time in human history where you have an investment that can grow 10x, and 10x means 10 times. So if you put in $100 investment, it can grow to 1,000 times, to $1,000. So that's a 10x return, and it can grow to 100x return, or even 1,000x return, right? And nowhere else on the planet right now can you put your money into something that has a 10x or 100x potential.
All right, but there is
for
a
growth.
reason why the government, and it's not just to keep the little guys out, because even Mark Cuban said this, is that 95% of the Silicon Valley companies are crap.
Yeah.
They're worth nothing. They're worthless.
Yeah.
Right? So you got all these VCs throwing $1 million here, $1
Yeah.
million there, and most of it goes to zero.
Yeah.
Okay, and that's kind of like I think why the government is trying to protect the public.
Yeah, but that should be up to us.
It should
You
be.
know,
It should be.
if I have the
It should
money,
be.
that should be up to me to decide that, not the government.
It should be, but the
Yeah.
government feels they have a response. That's why we have an SEC. That's
Yeah.
why we have insider trading laws.
Yeah.
That's why we have all these laws to
Yeah.
prevent the average. Basically, what an accredited investor means is you're telling the government saying, "I am a big boy,
Yeah.
and I can take care of myself.
And I have enough money
And I
to
have
take
enough
risk.
money to take risk. Leave me alone."
Yeah.
Right?
But with the Bitcoin world, you don't have to ask anybody for permission. There is no restrictions and there is no laws.
But there's
against.
still the risk is there.
But the risk is still the same. But it's up to you to do your due diligence. And if you're smart, you would listen to the Oracle of Austin, Texas here.
I'm
Okay.
blushing.
So, okay, guys. So we wanted to share that with you guys about how the venture capitalists invest on Wall Street and how the little guys like us should invest on Main Street. You know, be willing to take that small risk where you put $100, $500, or $1,000 at risk, but the potential for reward can be 10 times that amount, or 20 times, or 50 times
Or
that
it could go
amount.
to zero.
Or it could go to zero.
Yeah.
But you know, the worst case scenario is you lose that $100 or $1,000. But if you would invest in, for example, like $1,000 into, let's say you invest one Bitcoin, which was $600, into the Ethereum back in the middle of August. A year and a half later, as we're broadcasting this video from Starbucks,
It's about 40 times your money.
yeah, you would have made 40 times your money. So
Yeah,
that
you're-
$600 times 40 would be $24,000.
24, yeah.
Yeah. So you would have made, you know, $24,000 on your money for an investment that you made where you didn't have to do anything, and you just had to do the research and make sure that this guy Vitalik Buterin was smart enough and was capable and experienced enough. And still a huge risk. Don't get me wrong. You could have lost that.
Yeah, and
that
many,
$600.
let's just be fair now. Many
Yeah.
projects did fail.
Yeah.
Many projects did fail. So in most likelihood, we had invested in Ethereum, but that's not all we invested. We had NXTs. We had. I invested in Mastercoin and Counterparty
Yeah.
and a bunch of other stuff that did not work out.
Yeah. So
But I knew that was okay because
you don't have to be right on every one of them.
Yeah, exactly.
You don't have to be right on
Because
one of them.
I knew that when I hit that one,
Yeah.
the Ethereum.
Yeah.
I didn't know it was going to be Ethereum,
Yeah.
but I knew that if my thesis was right,
Yeah.
that would cover everything else and then
All the
some. Like
losses,
it would,
yeah.
the returns would be so huge. I wouldn't care if they all went to zero.
Yeah.
And they didn't go to zero.
Yeah.
I think we lost like maybe 50% here,
Yeah.
33% there. You know,
But we still came out ahead.
but we came out
Way ahead.
Way ahead, right?
Yeah.
We came out way ahead. Like it's not going to be 40 times your initial capital, but it could be 3 or 4 times.
Yeah.
You know.
Yeah.
So.
So hopefully this video, guys, helps you guys out to understand how to take risk and like a venture capitalist would on Wall Street, and then that will give you guys some more information on how you manage your risk by taking small amounts of risk in projects that have a potential for big growth. And then when you don't have to be right on all of them, you only have to be right on one or two, and the profits that you make from that is sufficient for you to pay for the risk, for the losses and all the other ones.
And you also manage your risk. Like it went up 40 times, but we took profits at 10 times. We took
Yeah.
profits at 5 times. We took steps to. You're not going to make all
And we'll
40
talk
times.
more about that
Yeah.
in detail in a future video, guys.
Yeah.
Right?
All right.
But thanks for watching this video, guys. And if you guys like these videos that the Oracle of Austin and myself is putting out, you know, give us a thumbs up. If you guys don't like it, give us a thumbs down. And if you haven't subscribed to our channel already, make sure you do. And we'll see you guys in a future video.